recently, Pine Labs did announce that it would be acquiring the API specialist startup Setu. Setu is now in the news because it has got its account aggregator. It's become an account aggregator. So let me talk about this and more with one of the two guys that started Setu after Nandan Nilekani locked Sahil Kini, our live guest today, and his co-founder Nikhil Kumar in a room saying something like, you need to work together, figure it out. And since then, we've seen a lot from the House of Setu, which in Hindi literally means a bridge. Sahil, welcome back to ET Now. First time we're hosting you since that big acquisition by Pine Labs. Now we're getting you because Setu's subsidiary is going to be an account aggregator. Why is this such a game changer? What is it going to mean for Setu and Pine Labs?
Firstly, thank you so much for having us on and for always helping us tell our story. Albeit the urban legend about being locked in a room together sounds a lot more exciting than it really was. But it was fun to kind of get started in that kind of vein. Firstly, it is a big moment for us as a company. One of our so it's technically not a subsidiary. We're supposed to have an arm's length relationship, and account aggregators have very, very clear guidelines on what they're allowed to do and what they're not allowed to do. So there is a separate entity called Agya Technologies, which we have some stake in it. And obviously we operate it. That entity has received the license. It will hopefully be India's best account aggregator. We've been obsessed over this right from 2016, 2017, when the first master directions came on using NBFC, on the establishment of an NBFC account aggregator. Since then, the ecosystem has grown tremendously. We have InPrinciple Approval. What that means is we have about 6 to 9 months to essentially operationalize this entity and put all the systems in place and clear another audit before we can offer this, full scale to get a fully operational license. What it means for Pine Labs and what it means for Setu is that we now have access to the full stack. We don't have to be dependent on another account aggregator to be able to provide these kind of APIs, which will provide data to anybody who wants to either lend to someone or provide personal finance management or do KYC. These are all critical steps within any account opening process or a credit underwriting process. Anything to do with financial inclusion depends a lot on data, because when you don't have assets in this country, the only other way to kind of give you financial services is on the basis of your data. And we have a national framework on how financial data must be shared. And we are now very fortunate and blessed to be one of the licensed entities to be able to provide that. So we think that it will unlock a lot of use cases in credit, in underwriting, in account opening. It will be one of those fundamental building blocks that will be available across the entire financial ecosystem.
Right. You and your co-founder Nikhil have often said that it's the account aggregator framework which is going to enable the new fintech revolution. If the first phase was all about Aadhaar, the second phase was all about UPI, this is going to be the third one. Can you explain to our viewers why that is the case?
Yeah, no, absolutely. See, why was Aadhaar so important? See, without Aadhaar, you couldn't get the Jan Dhan program, or you couldn't open a lot of where we opened in 5 years, we opened close to 450 million bank accounts. In those 5 years, 1 out of every 2 bank accounts opened worldwide was opened in India. And that was because Aadhaar made it possible for you to do KYC in a very simple manner. Then, of course, you've seen the impact of UPI, where when you make it truly mobile, truly user-friendly, and make it possible for you to make really small payments, make it affordable for merchants where it has been free, which may or may not be a wise decision, but it has certainly contributed to its growth, right? To the growth of digital payments. So once you've been doing account opening, you've been able to do digital payments, digital account opening, digital payments. Now to move to the next step, in most of India, most people don't have too many assets. So whatever assets they have already been hypothecated to get some loan or the other. So for most people in this country who don't have assets, the only way for you to actually get credit for example, and credit is a very important use case for account aggregator, is to actually show your cash flow data. So UPI made it possible where you're moving from small merchants and self-employed people moving from accepting payments purely in cash to accepting digital payments. And when you start accepting digital payments, you start building a transaction history of your income. Once you're able to show that, look, this is how much money I make in a given month, then it becomes easier for formal financial institutions, these are banks or NBFCs, to lend to these people, saying that even though you might not have gold, even though you might not have land, I know and I can see from your bank statements that you are able to earn so much income. And therefore, I know that you are good for so much credit that I'm going to give to you. That is the revolution that will be unlocked. Now, obviously, today you still have to give your bank account statement, but you have to do it either through a PDF upload or through screen scraping. And these are very cumbersome ways of doing it. What will happen with the account aggregator is that it will make it far simpler for the common man to share information about themselves so that they can get broader and easier access to lots of financial services, not just credit. It'll help in insurance, it'll help in personal finance management, it'll also serve as a different form of KYC. So all kinds of digital financial services become easier to deliver to a lot more people with the advent of the account aggregator.
Okay. Now, tell me one thing. You folks have in-principle approval. We've been hearing about others who may have in-principle approval, like from a phone pay to a tally. How many people have got, how many organizations, companies have got this in-principle approval for account aggregator? But when will it really go live? We've also been hearing about how more than 8 lakh people have signed up for this to have their accounts linked with this.
That's right. So, Chandra, what we see is, there are 2 stages of approval. The first is the in-principle approval, and then you have people with operating licenses. There are currently 6 entities with operating licenses and another 8 with in-principle approval. So what that means is totally there are about 14 account aggregators in this country. Out of the ones that are operational, I think 2 or 3 have gotten off to a good start where people have linked their accounts, and you see you can share data only if your bank has already joined the account aggregator framework. So I think there are about 8 banks live now. I think India will need, for this ecosystem to truly take off, public sector banks like SBI and all the other public sector banks to also join, which is, I think, very much in the offing soon. So what we'll end up seeing is, I think in the next 12 to 18 months, you will see a massive change in the way account opening, credit underwriting, and digital financial services delivery will happen, because more banks will come on board, which means more accounts will be there for which you can pull information. And that will automatically drive more lenders and more financial institutions to sign up to get access to that data. And once that flywheel effect takes place, what you'll end up seeing is, I think you'll see a large increase in formal credit being delivered in a purely digital manner. So I think it'll be a massive impact when that happens.
So basically, it is going to be a game changer. Now tell me, the merchant payments company Pine Labs, which has acquired Setu, how can Pine Labs really benefit from this in-principle approval?
So look, I think Pine Labs, we as a team has been very clear, saying that, look, they want Setu to operate as a independent entity that innovates and keeps building these kind of products. And the onus is actually on us to go and find areas within Pine Labs where our products can be embedded. And so we're very excited as a part of the Pine Labs group to provide these services. For example, the merchant ecosystem is a massive pool of demand, right? So we'll be able to I think business credit will be one immediate area that we might look into to see, can we provide credit to medium scale and small scale merchants. They've also, and Pine Labs, we've made a lot of acquisitions, I'm now saying we, where Mozambique was one acquisition where I think there are a lot of smaller merchants which use this particular POS terminal where it can be very useful. We've acquired QFix, which is also a large network of schools, etc. So there are lots of different types of small, medium, and large businesses that have been serviced by Pine Labs, and providing them more value-added services, either in the form of faster and easier digital credit through our account aggregator APIs. It could be, they have an app called Fave that was acquired. So building, let's say, for example, a personal finance management module within that, because it's a consumer app. So there are like lots of possibilities. I think, we're going to take it one step at a time. We are very conscious and honored by the responsibility that has been, trusted to us by the RBI. So our pure focus for the next 6 months is going to make sure that we have all the systems in place and we are able to kind of move to the next stage of getting that operating license. And then we want to not only be the best account aggregator stack in the country, and I'm fairly certain, given how well we know those systems, that we will be, but we also want it to be the most compliant and the most kosher in the whole ecosystem.
Is it also correct to assume that because of this account aggregator framework, now whether it is going to be a personal finance product or a business credit product for MSMEs, because of the account aggregator framework, the account aggregator license that will come through, Pine Labs will save a lot of time on integrations at the back end, and therefore will be able to go to market much faster?
Yes, I think for both, for us as Pine Labs, we've already built a lot of integrations with a lot of banks. Remember that this is a company that has been around for more than 2 decades and already has a bunch of integrations with pretty much every major financial services provider in the country. And Setu as well has been working very hard over the last 3.5 years to build a bunch of relationships. The thing that happens with the account aggregator is accessing data is no longer a function of how many integrations you have. It's a function of which account aggregator you're dealing with and how good their stack is. And so what that means is hopefully we'll be able to save a lot of time, not just for Pine Labs, but for pretty much any customer of ours as well. So for us, the way we as Setu kind of look at Pine Labs is they're our parent company and they're our first customer or first port of call whenever we build something innovative. So, that's the benefit I think Pine Labs gets. But Pine Labs CEO Amrish is very clear with us that he wants us to build these products for the whole ecosystem. So I hope we'll be able to save a lot of time for not just Pine Labs, but for every customer of ours.
But, I would also imagine that if there are going to be all these fintechs or API specialists that are going to get account aggregator framework, is that how you see the ecosystem panning out? Because there were many applications for this.
Yes, there were, and we're very fortunate to have kind of received this license. So using this is the reason we did this was not for essentially commercial reasons, right? Let's put it this way, because you can still be a TSP, a technology service provider in the account aggregator ecosystem, and potentially make more revenues and create more value, because account aggregators, as per regulation, are explicitly prohibited from engaging in any other business, which means the only thing they can do is serve that data in that format to a qualified requesting entity like a financial information user. So its remit is quite well bounded. A lot of the value that will be created in this ecosystem will be created more by TSPs who take this data and end up creating insights out of it. They crunch that data on behalf of the financial information user, etc. So I think what the reason for Pine Labs and Setu to have like a account aggregator license was so important was more from a point of view of the quality of the tech stack and the uptimes and the performance and the latency, etc. Because we're very nerdy about this. We're very obsessed about providing the best financial infrastructure, so that when you're able to so that we can go to our customers and say, look, we're not dependent on anyone else. We know how to do this. this piece is important to us for us to deliver a good product. The rest of the stuff will be still built by Setu and a bunch of other people. I mean, we could use another account aggregator as well. We're just happy to have access to one where we can determine the quality of the technology stack and make sure it's up to our standards.
Okay, Sahil, so you go be nerdy and build that tech stack. And thanks so much for joining us here today on Startup Central. It's a big day for all of you folks. So thanks a lot for giving us time.
Thank you so much for having me. Always a pleasure, Nayatara.